All right. Today we have on Robert Harden, and I just wanted to say thank you for your time. Thanks for taking the time out of your day to join us and share all the invaluable insights that you have from your experience as a real estate investor, private money lender, and a business owner.
Oh, well, thank you. I really appreciate you having me on. Um, I see you doing all kinds of things in the community. You're getting things done. You're networking. You're making money, doing all the things. So, really appreciate you having me on.
Of course, yeah. Thanks for your time. And just so we can kind of start with digging into what got you into real estate and what were you doing before you started and what piqued that interest.
Yeah, so I've been a contractor ever since I was really little. Actually, my dad. I worked with him like every summer since I was like. If you hear my dad tell the story, it's like since I was in diapers. So like he'd take me out on job sites. So I come from a background of like hardworking contractors. And so I worked every summer, learned how to do the trades. The main trade that we do is drywall. So got into the drywall business. Actually, before I graduated, I actually started my own company while I was in high school.
Wow.
Yeah, that was fun because I was like recruiting my friends to go out after school to drive out to job sites and like doing construction
Awesome.
cleanup. Well, it's kind of funny too because like the very first time, I would go out, my dad would give me jobs to do, and I would drive out there, take my truck, and do cleanup, and I would be there so late. And then something kind of clicked. I was talking with him like, God, I'm working really, really late before I can get back home. He's like, why don't you have one of your friends go with you and you just pay him? And I was like, oh, that sounds like a great idea. So
Yeah.
literally, I was making more money at that because at that point I'd go out and work and make like $100. But if I took my friends, I could pay each of them like $10 and like buy them McDonald's. And then
Right.
I would get back home way earlier and I'd make more. And I'm like, this is really cool. So
Right. Well, and then you can take on more jobs and build. Yeah.
yes, 100%. So it was a lot of fun. But anyway, that's kind of where I got started. My dad's gone through a bunch of different business partners. Like my dad's I would say like a bad business partner picker until he finally, until we joined forces. But he's been through all my uncles, and we had like uncles that had like drinking problems and then drug problems. So we had all kinds of crazy stuff in our past. But once we kind of joined forces, it was just me and him in the beginning. And like the very first year in revenue, I think we did like $300,000, and we're like, oh, this is amazing. And then the next year we were at like 1.5 million, and then the next year was like 3.5 million, and then we hit 6 million, and then 9 million, and then we topped out at 12 million. And this was in a really pivotal time, 2008, when we hit 12 million in revenue, and we all know what
Wow.
happened in
Yeah,
2008.
yeah, that's a huge deal. Yeah.
Giant housing crash. Like we were doing 300 homes a month, and we went from like 300 homes a month down to 30 in like a 8 month slide.
Wow.
Yeah, so revenue just dropped off. I had all these people, and I was like in my early, late 20s at that point, when this slide happened, and just didn't really have as much experience on downturns. Um, like when I got in the trade, like 2001 had happened, so we already had that crash, but we didn't have like a housing crash. So I tried to go lateral. So we literally went from just doing like new construction, and then we focused on doing commercial, like anything that had drywall. Like literally, our salespeople were like, our whole criteria was, "Do you need drywall?" And they're like, "Yeah, okay,
Right.
great. Let's figure out how to do this." So we started doing like city halls, schools, big commercial projects.
Okay.
So we got into a bunch of stuff that we had no business being in. That's one of the problems when you go lateral and you don't really do your research and you're a little too gung ho. Because I'm literally of the crowd of the motto of like f around and find out. Like literally,
Yeah.
that's my whole business model.
Yeah. My dad, he wears a shirt that says that, and that yeah, I grew up with that same motto.
That's like every entrepreneur. Like if
Yeah,
you're, that's the only way to expand yourself and grow. So
exactly. So it sounds like you guys weren't really prepared for that downturn. So at that point, it was just kind of like survive.
yeah,
Yeah.
it was survival mode. What I should have done is take laid everybody off and then just rebuild.
Okay.
Like literally downsized, said, okay, we only have 30 homes here. We only need this many crews to do this. But we tried to like keep everybody on, which we did. We actually kept everybody on, but we did a bunch of other work. And we had problems like, I remember this school we did in Hood River. Um, one of our estimators that had been doing new construction switched over to commercial. After we get the job, we're awarded the contract and we're already like working. His name's Paul. Paul comes in and goes, "Hey, Rob, have you heard of these isolation clips?" And I'm like, I think I've heard of them. I don't really know. He's like, "Well, this is what they do. They're these little springs and we attach them and they're pretty expensive." And I go, "Okay." He goes, "Well, this job we bid in Hood River, it's on the plans and I really didn't know what it was, and it's in our scope of work." And I'm like, "Okay, well, what's it going to cost, Paul?" And he's like, "It's 30 grand in order to buy the clips and install them." So like we had no, like those are the problems that we're running into. So
Right.
yeah, really, really expensive problems. And then couple that with when the housing slide happened, we had so many builders not pay us. Like it was just
Yeah.
crazy. Yeah, and
Yeah, we
valuations
we
dropped.
experienced that too. My dad owns a glass company, windows and doors. So we ran through the same issues where it was like we were chasing people just to get paid, and they wanted the work done, but they didn't want to pay for it. So it's especially when you're running a business where you're net 30 or net 60, that becomes a problem because you are doing and you're putting out the money and you're paying people. You've got payroll and materials, but then when it comes time when you need to pay your manufacturers, you're
Yeah,
not getting the money in from your customers. So that I can see where that would be a huge problem. So where did you pivot from there? Where did you start to
yeah,
see a different change?
yeah. So once we pivoted, we went into some different. Like we started a restoration business. So we started some different businesses at that time, and that was it was amazing because my brother-in-law is the one that runs and built the business. His name's Ty, and he's just a rock star. There's no other way to put it. Like the guy, he built the whole thing. It's like right now it's like a over $5 million restoration business. And then he actually moved from, we're in Portland, so like Portland,
Yeah.
Oregon. And then he moved down to Arizona and Phoenix and set up another one that's doing like 2.5 million a year. And then he moved back to Portland because he was like, he wants to make sure that this is running right. So he's just amazing. Like I have amazing family. So
That's
I
awesome.
definitely
Yeah,
wouldn't be.
there's a lot to be said about people that you can really count on when it matters.
Yeah, completely. So that was the pivot. We got into that. We went back to our focus of, the type of work that worked for us. So we did that. And then um, I started following all these real estate podcasts, like Bigger Pockets. Like Bigger Pockets was my jam at the time.
Yeah.
I went down the rabbit hole of all the, like I was just fascinated with it. And at this point, I only owned a couple doors at this point because it was the
Okay.
traditional like buy a house, and then when you go to move, you're like, I heard that it's important to have real estate and rentals, so I think I'll do this. So I
Hmm.
just started, and I had all kinds of problems. I had squatters along the way and
Now,
bad.
were these all in Oregon that you
Yeah,
had it?
all in Oregon.
Okay.
Yeah, yeah. Like my first house was in 2001, and I did some of the building on it. I had a builder that worked out there, and it was like our first big subdivision. So I've been doing the drive. It's like a 45-minute drive back and forth from my parents' house to this house or the subdivision. And the builder's like, "Why don't you just buy one of my houses?" And I was like, "That's a great idea." So I bought
Yeah.
one of his, and he let me do some of the work. So we're already doing his drywall at the time. So we did our own insulation. We did concrete and a bunch of other stuff. So that was like, so I got into it at that point. So I had a couple
Okay.
houses up until like mid, like it was like 2015, 2016, doing the podcast, Bigger Pockets. And of course they're pushing Burr deals, like everything, the Burr method. Now I found that as a challenge in Oregon because in Oregon, we have really high price points. It's not like the Midwest where you can, like I have friends in Indiana right now. They're buying houses for right now 30 grand. They're putting
Oh
50
yeah,
grand into it.
all day long. Same with Ohio. I know people that are 30 to 50 grand all day long. And it's like that just seems so crazy because I'm here in Texas, DFW area, and you're not touching a house. I mean, even for 250, you're getting something that like the roof is probably caving in.
Yeah,
You
yeah,
know?
huge problems.
Yeah.
Yeah, it's too funny. So yeah, I was trying to do bird deals out here, but I couldn't get anything to pencil. Like, oh, this doesn't make
Mm.
sense. We find some, they're kind of far and few between. And then I started listening to Wholesaling Inc. podcast. and I actually signed up for their program. Cody Hoffine was like the face of it at the time.
Hmm.
Um, Really interesting program. I Problem that I ran into is that I just didn't dedicate enough time to it. My drywall business was very busy at the time. I was trying to wholesale and get deals and get my foot in the door on that, but didn't really get any traction just because I wasn't putting in the work. It's the bottom line, just not doing the thing. Um, Plus, not knowing how to have those conversations with sellers. That was the other issue because their program at that time, I don't know what it is now, but their program was more focused around mailers, and they didn't really teach you much negotiations with sellers.
Mm. And that's
Um,
huge. To lock somebody up,
Huge,
that's huge. Yeah. That's a
huge.
whole art in itself.
Yes, I came close, but I couldn't lock up any deals. It was difficult. And then they had this guy that came on their podcast. This crazy guy. He was talking about how he's buying these houses. He was taking over mortgages. He was doing all these creative finance things, and my mind was just completely blown. And we all know who that is. It's Pace Morby.
I was going to say,
Pace
I
is
wonder
the
who
guy.
that
So
is.
once I listened to that podcast, I'm like, oh my god, who is this Pace guy? And the same issues that everybody does in the beginning. What kind of scam is this? This has got to be a scam. There's something
Yeah.
wrong with this.
Yeah, you're like, there's no way. It's too good to be true.
Way too good to be true. So after listening to Pace's stuff, go on the YouTube channel, and then of course, he had Sunday service at the time. I think he had a couple other podcasts and places you could catch him. So I started, consuming all the content like everybody does in Sub Two.
Yeah.
They
I
consume
did
all
the
the
same thing. You get in that rabbit hole and you just can't stop.
Yeah, yeah. I went down the rabbit hole, and I had it in my mind that because Gator just came out when I finally was getting ready to like join Sub Two or join something, and I was like, God, do I really want to pay 10 grand? At the time, it was like 9,000 something, 9,800, I think, to join Sub Two. I'm like, do I do Sub Two? And then Gator was really cheap at the time; it was like
Mhm.
$1,700 or something. I'm like, it looks like the same thing, from the outside. They kind of seem very similar.
Yeah.
But once I joined, I did like Gator, and I still like Gator. But within, I think it was like 2 weeks, I just go, why didn't I just join Sub Two? So I
Yeah.
joined Sub Two like right after.
Yeah. FOMO for sure. It sets in.
FOMO.
You're like, well, I am missing out. Like Gator, don't get me wrong, Gator is awesome.
Yes.
But there is a huge sense of FOMO when you're in Gator and not in Sub 2.
Oh, completely. Yeah. I can see that too, especially when I'm in that Facebook group, and the conversations there and the conversations in Sub Two are very different. So you can definitely see where they definitely want to be in there,
Yeah.
100%. Yeah. So join Gator, join Sub Two, and at that time the Zero to Hero challenge just was complete. I want to say like a few months before, and everybody's talking about Zero to Hero. So I went ahead and I'm like, oh, I'm going to do the thing. So I got VAs, started calling, I had cold callers, and within about a month, I got my first contract. Um, but the contract, the funny thing with it, is that it was a cash deal, and it didn't close. It was the seller had some issues with the property to where we couldn't get a clean title and stuff. So, but what was amazing about it is that the community. So like when I actually found something, I partnered up with Carolina Allen, who lives out here, and which is funny too because like when I joined Sub Two, the community just reaches out to you. So I was on phone calls. I was like, getting love bombed. It's such an
Yeah.
interesting thing that goes on. But I'm on the phone with Carolina Allen, and we're talking about where we live. And I'm like, I'm in Tualatin. She's like, what? You're in Tualatin? She's like, I live in Tualatin. I'm like, oh, well, where do you live? We realized that I can walk to her house like in 5 minutes.
Oh my gosh, how cool is that? Yeah, I've had that happen so many times, especially now that I live here in DFW because I'm born and raised in Maryland. And when I joined Gator, I was just in that transition period of leaving Maryland to come here. But having conversations, one of my very best friends, Emily Deity, she's a TC. She sent me an email, just an outreach email of like, hey, we should connect. Um, I think 2 days after I moved to the DFW area, and she was 20 minutes from my house. And I was like, oh my gosh, why don't we get coffee? And then it just built into this great friendship. So that's a really great thing about all of these communities is, being able to connect with people. And then you're like, holy crap, we have a lot in common. And, it can build into something other than just a business relationship.
Oh yeah, yeah. My best friends are in sub two. It's
Yeah,
ridiculous.
yeah,
Like I talked to Michael. Michael Kim is doesn't live too far from me, and we talk all the time. Like, and
that's
there's a bunch
awesome.
of other, Todd Kono. There's just so many people in my market that are just amazing, amazing
Yeah.
people.
Yeah, when they talk about like how your friendships they change as you grow, and if your friends from beforehand, if they're not also pursuing, a path of growing and changing, it's pretty cool to find a community like this where you find very like-minded people that are all pursuing the same thing, and whether you're into fitness or whatever, travel, whatever it is outside of real estate, you can also find people within the community that are growing and pursuing better but still share the same values and morals and passions outside of just the real estate side. It's been
Oh
life changing.
yes,
For
life
you
changing.
as well. Yeah.
Oh yeah, I feel I'm a completely different person
Yeah.
since I was. Yeah,
So how long ago was that again that you joined Sub 2?
yeah. I joined in April of 2022.
Okay. And then so when you did the zero to hero, your VAs, were they calling for you and locking up contracts? Were they starting the discussion and then you were closing, or what
Yeah,
did
they
that
were
look
they were starting the yeah they started the conversation, and I was closing them, dispoing them, the whole thing. So,
like?
but
Okay.
this we were trying to just buy for our own portfolio. Like that was the intent. I was trying to wholesale if it was a deal that didn't make sense, and then keep the ones that did. So my first deal actually was this guy named Lester Hawkins in Beaverton, Oregon, and Lester had squatters in the property, and I JV'd with a guy named John Robinson, who's also in Owners Club. John's a rock star, awesome guy. JV'd with him, so he helped get the squatters out, and he helped me negotiate with the seller and gave me guidelines, like of what to go for. And I ended up actually, so my first deal was a seller carry. Got the guy to agree to 5,000 down. He carried the note for 5 years and 0% interest.
Wow.
Yeah,
That's huge. Yeah,
yeah.
that just gives a little, anybody that's watching, that's just a little bit of insight on how crazy these deals, again, it seems too good to be true, but there are definitely sellers out there that will do 0% financing. I actually have a sub two house here in the DFW area that I got 0% seller financing. So it is not one of those things, they're not, I would say they're unicorn deals, they're not just around every single corner, but they are out there. And if you're persistent with it, then they will come.
Oh, 100%. That's straight up. And like this one here, our payment to the seller is like 902 a month after taxes, insurance, and all the expenses. I think our expenses are close to 14, between 14 and 15 a month.
Okay.
It's now a short-term rental, and we net between 25 and 3,500 a month on that one on
Wow.
average.
That's
Yeah,
huge.
it's crazy. So
Yeah.
that was the first one. And then now currently our portfolio, we have 27 doors, and
Congratulations.
we're actively looking for more. Our whole thing, especially with our market, is since it's an appreciating market, so we're trying to play the long game on it.
Okay.
Like right now, we currently have 12 million in assets, and we have a goal of 25. So
Okay.
we're aiming for 25. Why 25? Because at 25 million in assets, if you have average appreciation, even if you're only getting like 4% a year, your portfolio is increasing in value by about $1 million a year.
Okay. Yeah,
At some point,
that's
you can
great.
start doing cash out refis of $1 million a year. So that's our thinking.
Okay, so and that's what I was going to ask you next. So with that equity, are you currently tapping into that? Like when you buy properties, are you tapping into properties that you already own that equity to buy the next one? Is that
Yes, we just did it. We just did it on one in Salem that this was more of a value add one. It was like the first cash deal we did like 4 years ago. Bought a single family house that was on two lots, and then we developed it into a duplex. Learned tons of lessons along the way because, well, what's funny about this one is that if you drive in that area, everybody knows where this duplex is because it's the biggest duplex, biggest structure within like 2 miles.
okay?
So the mistakes made on that one or the lessons learned is you need to build within, like if everything else in the area is like 1,400 square feet, don't go and put, 3,000
Don't
square
be the
foot.
biggest. Yeah.
Yeah, don't be the biggest. One thing, they can't get comps. Like when you do a refinance, like you're not going to get the valuation.
Mm, okay.
You're also going to spend way more money on it. Like the one we built, we could have saved in construction costs at least 150,000 in construction costs and still achieve the same thing, achieve the
Right.
same rents, the same, all the good things. but not spend as much.
Okay,
So,
so you're not seeing the upside of that, the larger, if you were to just stay in the parameters of the median, you would see the same upside that you're seeing now with having the biggest one.
oh yeah, the biggest one is not bigger is not better when it comes to like value add plays, more like middle of the road. Just keep it middle of the road. Refinance is easier. Construction costs are in line. Um, yeah, we could have saved on that part of it. Also, in the refinance, we could have got more out of it.
Okay.
So we pulled out some equity from it. We're trying to get a second on it, like a HELOC.
Okay, that's what I was gonna ask you. Are you doing the cash out refi or a HELOC?
Yeah, we did both. Okay, looking back, I should have just went cash out refi and took out a big chunk because
Okay.
what I did is I took out. Well, here's the raw numbers. We bought it from a wholesaler for 135. We put in $600,000, building it.
Hmm.
So we're up to like 750 ish with holding costs and everything, somewhere around there. Um, and then it's right now it got valued by the city, like not the city but the county. The tax assessed value is 935. Appraised value is around 1.1. But we only took out 360K, so we just drew out 360, so we'd have another three to no, actually I think our loan officer is going for 500K. He's trying to get us online for 500K on it so we can go out and do more, buy more.
Okay.
But I wish I would have just took out a bigger chunk. It's just easier to do that way because
Yeah.
after you have that lump, as you stabilize all your houses or your portfolio, then you go, okay, we have this much left over to buy new deals and keep
Right.
that ball rolling.
And then you're also doing private money lending, correct?
Yes,
Okay.
yes. Right now, I'm working with connectors. I have a couple people. I have a couple buddies locally that need funds for their fix and flips. So I'm working with them locally, and then I'm working with connectors like in Indiana, Missouri, and a few other places in the Midwest where they're doing these bird deals that are ridiculous.
Yeah.
Like he's buying it for 30, putting 50 in it, and then he's cash out refi getting like a check between 15 and 20K, and he has a cash flowing rental where he's making $300-$400 a month.
Now, as a private money lender on those deals, what does that look like? Are you getting written appraisal values or, kind of like for your security on their projected numbers? What does that look like for you in your process?
Okay, I love that you asked this, and you're gonna hate my answer because okay. So for one thing, if I ever not get paid back and I do what I'm doing right now, I am not gonna cry to Pace about it because I already know what he's gonna say. So I won't say anything about it. So on the ones I'm doing right, the correct way, yes, I'm going off appraised values. We're looking, we're either going 75, 80% or 90% LTV,
Okay.
and but most of my lending is all based on the borrower. Like I have personal relationships with these other ones, and like we own other properties together on some of them. So they're people I trust. I know where they live.
Right,
So
right. Yeah, that's always my favorite. It's like, hey, I know where you live, so don't I
yeah, yeah. So I know where they live.
know your
Now,
family, I know where you live.
but the other ones are a little bit more risky. The returns are better, but I still uh, basing it upon the person that I'm doing business with.
Okay, so are you also getting, when you say that, are you also getting any personal guarantee or is it just the personal relationship?
No, no personal guarantee. All
Okay.
money is going through title and escrow. So I'm confirming, wire receipts, making sure that things are going. Personal guarantees, and also looking at their portfolio, and also looking at credit scores.
Okay.
What was the other things that we looked at in our due diligence? Different security instruments. They have money, cash on hand, bank accounts, bank statements, that kind of stuff.
Okay.
Yeah.
Okay. Okay, so yeah, I mean, maybe not PACE approved, but those things he would that would align with what we were taught in Gator. So do you have a team? Like when you say you guys, is it you and your wife, or are you just doing the due diligence as the private money lender? What does that look
Yeah, just me. I'm just doing it. And hopefully she does not listen to this podcast because she does not like private money lending at all.
like? Oh no.
And she does not even like the states that I'm investing in. So
Okay.
she's not okay with either of those, but she's running her stuff and I'm running my stuff. So
Okay. So is she also in this field?
no, no, she's not.
Oh,
No,
okay.
we have a daughter, 16-year-old that's in high school, and she's like full time on that.
Okay.
Um, She's also dealing with some health issues right now too. So my wife came down or was diagnosed with stage 3 breast cancer a couple months ago. So
Yeah, I was going to ask you about that off air. I didn't want to. So
no,
I
that's fine. We can have it on there.
was
It's
just
we
praying for you guys.
Yeah, thank you. I appreciate that. Yeah, it's going good. We have another treatment on Thursday.
Okay.
So, but yeah, it's treatments are going good. She's staying healthy. Her spirits are up.
Oh, good. I'm glad to hear. Yeah, because last time we talked, I know things were, in that process, but yeah, I've been thinking about you guys and praying for you.
I appreciate that. Yeah, I think it's all adding up, all the prayers, because her spirits are high. I wish that the treatments were just a little bit longer apart because we're trying to sneak in some little vacations. Like we
Okay.
went down to Scottsdale, or sorry, Tucson. Um, it was a couple weeks ago because she was having 3-week treatments.
Okay.
So there's enough time in there, but the 2-week ones are a little bit
A
too
little bit too
quick.
close. Yeah.
Yeah,
Yeah. And I'm
yeah.
sure in the beginning, it kind of brings your spirits down when you first get the treatment. That's can take a toll on you.
Oh, for sure. Yeah,
But it
definitely.
sounds like she might be more keen to the private money lending with what I was talking to you about being a co-lender, being first position. She-
Yes. I do have actually 2 first position notes, and I do like those, and I probably will pivot towards those.
okay.
I think that well, obviously they're safer, but
Yeah.
they're still, with real estate investing, it's like, it's scary anyway.
Yeah. Oh yeah. I think any type of investment is scary, right? Because there's no guarantee to anything, whether you're buying, whether you're lending. There's always that sense of like unknown. Especially in today's world, I feel like everything's so unknown. But you can do an educated investment and do all the things that you're supposed to do and check the list off. And it's like at the end of the day, I think it's more risky to not do anything at all and just do the typical saving. Transferring 10% of your check to your savings account if you can even afford that. Some people can't even afford that. So if you can lend while you can and make your money work for itself. That's the way to do it.
Oh, 100%. Yeah.
So are you buying businesses too?
No, I like the idea of buying businesses, but after being a business owner this long, I guess I think I would consider it if it's a right type of business.
Okay.
There's so, like in my business, there's so many moving parts that I get. I think it's just where my mindset is right now. I think
Yeah.
it's one of those ones where you see other people having 4 and 5 businesses, and you're like,
There.
it's the same ones that have like three
Yeah.
and four kids. It's like, how do you do that? How do
Yeah.
you?
Yeah, for sure. Even with pace, he talks about it all the time where people are like, how do you do what you do? And I was on a podcast last week and that the calendar Zoom that he's been doing. Have you been getting in on
Oh
that?
yes.
Yes, that's gold.
100%. You should see my calendar now. Like I showed my wife the other day, and she's like, "How do you even get through that?" And
Yeah.
I'm like, I don't know, but I'm busier than I've ever been, and I'm getting more done."
I was gonna say the same thing. Like I used to look at my calendar and get overwhelmed, like when we first started, by like, holy crap, how am I gonna get all this stuff done in a day? But by, having those timed out sections of, just productivity and focusing on one thing, I feel like my productivity and cash flow, everything's gone up. And then even like I used to be exhausted, and I think it was just the constant, zigzagging back and forth between tasks. But now that I've got my space of networking and my space of like this is my computer work time and etc. It really allows me to focus, get more done, and then I don't feel so mentally exhausted by the end of the day. And then I'm like proud of myself because I'm like, holy crap, I got all that done.
It's
So
awesome.
what does it look like for you in 5 years? Like your Mount Everest. What have
Ooh,
you
that's
kind of
tough.
nailed that down or where are you at currently?
No, I've been bouncing around on that one. I'm thinking now that I want to do lease options.
Okay.
So that's one thing that, in fact, I have a meeting with another sub 2 student this Wednesday or tomorrow. We were chatting about it, and he's local as well.
Okay.
And because I'm seeing a need, like in my market, there's a lot of deals that just don't cash flow, a ton of deals that don't cash flow, but they would make perfect lease options where we can get a fee up front, help get somebody into a home, make a little bit on it, but not have as much exposure is like most of the ones I'm buying, we're having to put anywhere from 25 to 50,000 into it for acquisition,
Okay.
and we make no cash flow. So it's
Yeah.
like I've got enough of those. I don't mind having those, but I'm looking to pivot into multifamily, RV parks, those kind of investments.
Okay.
And plus, I'm looking at the return I'm getting on my private money lending. It's like, why would I put 50 grand into this? Like, I could make $1,000 a week on that 50 grand over here.
Yeah.
Like, it just doesn't make sense to me. So now I'm looking for bigger and better deals.
When especially when you have to deal like the single family homes, I just it's a great way to I think build wealth over time. But like you said, having an acquisition fee, I mean, even nowadays, I'm not really seeing them less than 30,000. So it's like an acquisition fee of 30 to 50, 60,000 when you could take that money and go lend it, or take that money and go buy a business or an RV park, which is essentially a business. It just the cash flow doesn't really add up. So single family, I think, is great for long term wealth building, but it just takes too long. And with the deals that we're seeing nowadays, the cash flow just isn't there. So it's like if that's your ultimate goal, at least in the beginning half, I don't feel like single family is the way. It's still a great way to build wealth over time and to like pass a legacy down to your family, and be able to tap into those assets and that equity. But I just don't think I think we all tend to start there, and it's great because when you learn and you do have those kind of like headache things that you have to learn and bump your head and grow from it, they're maybe not as big as a loss as it would be in a business or in an RV park or multifamily. But I think once you get a couple deals under your belt, it's really one of those things where you should probably pivot to something that's going to make you more cash flow quicker, and then kind of revert back to still buying slowly over time and continuing to lend. That's kind of where I'm at right now, is like single family is great, but the amount of hunting for deals, that time that it takes to do that just to find a good deal that I'm actually going to purchase, if I took that time and money that I was going to put into that one single family deal and put it into a business acquisition or an RV park, like it doesn't really make sense anymore. And I think that it's something that we all have to kind of like go through that process, because you do have to learn and you have to understand certain things and the lingo and the how to deal with the stress and the headache that can come from it. But yeah, I think people that just continue over years and years and years solely focusing on the single family homes, it kind of stunts your growth.
100%, because there's levels to the game. In the beginning, you're just like, I just want to get my hands on a deal,
Yeah.
And then you go from that to, okay, now that I have this deal and you wholesale it or whatever you do with it, now you want to own stuff. And everybody needs to do, I think everybody should do some single family just so they can experience tenants, setting up utilities and just all the things that come along with
Absolutely.
that. Because it's easier on a smaller level. Like I talked to some of my friends that are doing RV parks, multifamily, and when they have an issue on theirs, it's an expensive
It's a
issue.
big issue. Yeah.
Where like you get like a sewer, like we have a sewer line that needs to be replaced on one of our projects, and it's like 8 grand, and it's like, okay, that's not, it's horrible, but it's
It's
not
not going to
horrible.
break you. Like
Yeah,
you
it's not
can,
going to kill you.
yeah,
Uh, Multifamily, if you're off on your numbers, it could be really devastating.
yeah.
So, like,
Well,
learn
and
your
then at that point too, if you're multifamily, more than likely you have, other people's money in the deal. People that, do have a W-2, and they do, not that you don't work hard for your money, but that might be all that they have is their 50, 60 grand that they put into your deal, or 100 grand, whatever it is. That might have been their nest egg, and now they've put it into your deal and something's happened, and you've got a lot more responsibility on your shoulders to make sure you figure it out.
Yeah, that's stressful. Other people's money stresses me out more than any. I don't know why. When I lend it, I'm not stressed on it, but if people are giving me money, it does make me really stressful.
Absolutely. Same here. Yeah, that'll cause me to not sleep at night. It's my, like you said, my money. I'm like, oh, I know I've done my due diligence, and same when I connect on a deal or like the co-lending stuff. I always do my due diligence, and I would never pass along something if I haven't done mine. But it is very different when someone's entrusting you with their hard-earned money. That's a lot. That's a lot of weight on your shoulders. So I think being able to, like you said, levels to the game, going through that and being able to build over time your stress management. There's a lot to be said for that. Experience is everything.
100%. I love it. Yeah. So that's my plans right now is that I think I want to do some lease options moving forward because I like that business model and then keep doing lending. And we have a couple RV parks right now that we're underwriting. So I don't know if they're going to go anywhere, but we'll see where that goes. But it would be awesome to do one.
Heck yeah. Well, I would love to have you back on when you get that RV park because that's kind of my next peak of interest. I've been super focused on this business acquisition right now and then just connecting on the co-lending deal with Everbridge. But RV parks, I think that they're another great thing to tap into. So I'd be curious to hear about how that goes. Where are you looking in Oregon or all over?
Yeah, we have one in Oregon. We're looking at one in Oregon, and there's two right now in California,
Okay.
of all places. I know.
You're partnering up?
Partnering up, yeah. So I have partners on both, actually all of them, and I need partners on this. This is one of those ones where I feel like I'm out of my range on. Like,
Oh, yeah. Yeah.
yeah, multifamily I feel pretty comfortable with, but RV parks, it's more of a utilities and pads and all these other. It's just different. It's kind of the
Yeah.
same but different. But multifamily I feel really comfortable with coming from my background in construction. Like I've done tons of apartment buildings, so I know apartment buildings in and out as far as the cost and all that kind of stuff, but and it's very similar to a duplex or a triplex because it's just more units of the same thing and more tenants in the same spot. So it's very, very similar, but RV parks are another animal.
Yeah, yeah, I would agree. And that's honestly why I try to listen to some of the Zooms and things, but I feel like I get so overwhelmed because I'm trying to learn that, but then also, even the business acquisitions. Like I've done business management for years and team management and all like the things within a business. But the actual business acquisitions is a completely different animal. So my partner, that's where he brings a ton of value into it because he knows, what that underwriting needs to look like and the due diligence. And we have other people that, with our SBA lender that also bring their expertise. But yeah, it's been really cool to be within the community and have so many people where, like yourself, you feel comfortable with multifamily, but not so much with RV parks. And you can partner up with somebody that is vice versa and you guys can bring value to where the other person may not feel so comfortable. So I think that that's probably one of my favorite things about Sub 2 Owners Club Gator, is just the partnering that happens and how it just multiplies and takes you so much further than you would be by yourself.
Yes,
Yeah.
guaranteed.
That's awesome. So, anybody that is watching this, do you have any advice to somebody that maybe wants to get started and do what you're doing? Anything that you would go back and change, or whatever advice you have to share?
Definitely network faster. Get out to all your local events, meet all the people, learn all the players, and you want to spend all your time talking about them. That would be, if I could go back and do it over, if I just focused on that, I would learn all the things that everybody's working on so you can bring value to them. Because if you find out if somebody's looking for this type of fix and flip and you're meeting another person that has that, a wholesaler that has that thing, you can bring it to them. And then just partnering up with people that are doing the things you want to do.
Mm,
Like if you want to be a fix and flipper, go find that guy, learn from him, do business with them. So that would get me farther along. I probably would have saved at least a year on my learning curve.
that's awesome. Yeah, I think that's great advice. And a lot of people that if you don't have the knowledge, the sweat equity, the people that have the knowledge, sometimes they're at a point where they don't really either they don't want to put the sweat equity in or they don't have the time. So somebody that is learning, and because I know that's where I struggled in the beginning, was like, I don't have any value to bring to these people. These people are doing big deals. But they find a lot of value in people that are willing to, they have maybe a little bit of time to put in where they can't. And you can, like you were saying on your Sub 2 deal, you had a partner that, basically told you what you needed to do and knew the steps, and then you went out and did it. And I think that that's where a lot of people struggle in the beginning. So if you're just willing to figure out, the time that you can put into it and put that sweat equity in, you can bring a lot of value to people that are scaling.
Yes, yes. That and join sub too. I meet so many local people and they're like, "Oh, why would I spend money?" I'm like, "Well, the community is just out of this world." The information's great too. And honestly, Pace's family night Zooms and even like our owners club Zoom on Saturday and Sunday mornings, those are pure gold. Like
Yeah.
just pure gold.
Yeah. I mean, you can't even really you can't put a value to it. I mean, it is that priceless of, the community that's built around it, but just the knowledge that he drops and him taking the time out of his day to share that stuff with us. And then he's genuinely invested in seeing us, succeed, which I think is so cool because pace is pace, right? But seeing him get pumped up when, even when we're at our owners club meetups and somebody's like in the room in the corner closing a deal and he always makes a comment. I think that that's really cool that he's so pumped to see people succeed. And it's not, there are a lot of other communities that I've been in, maybe you've been in, it's really just about the money, the subscription, whatever they're making off of it. And, Pace pours back into all of his communities 10 times than what he is actually getting out of it. So,
Oh, complete, especially with owners club.
yeah,
Like the amount of money, there's no way they're making any money on it as a like
no,
mentorship
yeah, yeah,
or a
it's
mastermind.
insane. It's definitely one of those things where I'm like, thank God I changed or I jumped in when I did because there are so many people that I talk to now outside, like, gosh, I can't wait to get in, and I'm like, I don't know, I don't think he's opening it back up. It's one of those things where if people leave, he said he was keeping the size the same, so if people leave, then you get some spots that may open up, but I don't think he's looking to grow this one. It's pretty exclusive.
Yeah, I think it's amazing too. I stepped out actually at Squat Up Summit. I stepped out of the room for a second when they were doing the pitch. I didn't even hear the first pitch on it. And then we're hanging out at the bar later, and then Chino walks up and he's got this big black box, and we're like, what is that?" He's like,
Right.
"Oh, it's Owners Club." We're like, "What is Owners Club?" He's like, "I don't know. Pace just told me I have to do it, so I did it." We're like, "How much was it?" And he told us, and we're like, "You didn't even look into it. You just paid." He's like, "Yeah, Pace says it. I'm just gonna do it."
Yeah. Yeah. It was one of those things where he just started talking and just talking about like he was like, I don't even know really where this is gonna go. But I knew that anything that Pace puts his hands on and anything that he brings his team into, he always provides more value than what you actually pay to be in it. And I was sold.
Yeah,
Yeah.
same here. Once I talked to them and I saw everybody, I got FOMO a tiny bit, and I'm like, and I was looking to level up, and I'm always am like all
Yeah.
the time. So I was like, okay, this is a quote unquote better room, or people doing big things. That's the room I want to be in.
Yeah.
So
Yeah,
yeah,
for sure. And that's like again, the community being around people that are doing deals, like if they're investing that into their growth and their future, then that they're actively pursuing it cuz I'm actually not in sub 2, but I am in Gator. Um
well, we got to get you in.
I know. I know. I don't know why I haven't joined, honestly. It's honestly, I have so many partners that are in it that I feel like I'm in it, but
I thought you
I
were.
do need to join. Um, but you get a lot of people like in Gator that, it's still an investment, and I think it's a great starting point for people that maybe aren't sure or they're just learning and they want to get their feet wet. But unfortunately, because it is a lower investment, you get some people that invest and, they might put 2 weeks in and then life gets busy. And, you get a lot of people that don't follow through in whatever that looks like. And the great thing about Owners Club is you're more than likely not ever going to get that because it is an investment. You get people that life happens, right? But we're all there to support each other. And even if we have a hard day, we're picking up the next day and ready to keep pushing forward towards that Mount Everest.
Heck yeah, yeah. Gator's got great stuff. I went back and redid the Snappy Start and all the beginning modules. Plus, primarily trying to like I need to start making sure that I'm vetting deals better. So that's why I'm going back through the training because I'm like, I haven't lost any money yet. I say yet because everybody, I guess,
Mm-hmm.
something you're going to go through at some point. So I'm like, I
Oh
better
yeah.
circle back through and see if I can limit the amount of downside I have.
Yeah, yeah. It's unfortunately it is. It's one of those things where it's bound to happen, and you just have to kind of prepare yourself the best you can and doing the due diligence. But I think we all kind of start in that where we're like, oh, we did our due diligence, but knowing you really didn't do everything that Pace taught you to do,
Yeah,
and
yeah,
then you might lose on a deal, and you're like, okay, let me go back to that training and just double check. But yeah, it's a growing experience, and they always, whether it's Gator, Sub Two, Owners Club, they're always adding more. It's never just like this is what you get, and have fun. They're always finding a way to upgrade and add more value to everybody. So I think that that's why it makes it so much better than some of the other communities out there that just put their content out and they're like, well, 10 years later you're still, this is what you have to deal with. So but thank you for joining today. If you want to share like where people can find you, if they're looking, if they've got deals or if they've got private money lending deals that maybe they can connect with you on, how can they find you on social media or any
yes,
contact?
definitely. Hit me up on Facebook or Instagram. It's just Instagram's at the Rob Harden, and then just look up Robert Harden, Portland, Oregon, and you'll find me on Facebook.
Awesome. Well, thanks for joining today. I appreciate your time, and we definitely have to connect more on some private money lending and find ways to work together.
I know. I actually was pitching my family on some of. I was explaining some of the stuff you're doing, and they're like, "Wow, that is so interesting." I'm like, "Just keep it in mind because I'm going to be looping back."
Yeah. Yeah,
Just
let me know if they ever need to hop on a call and I need to bring any of my guys on, like, that do the back office stuff as far as the underwriting. Happy to do that. Phone call, Zoom, whatever works. Anytime. You've got my number, just reach out. I'd be happy to help. And I'm always happy to work with new people and share that. So, as a private money lender and having lost on deals, that's what makes me so passionate about the Everbridge deals is you like you can't, I don't want to say it's 100% guaranteed, but there's really no way to lose given that the underwriting that they do and then getting those monthly payouts. That's unfortunately you don't see that a lot in the real estate world because you're just not cash flowing until you do sell it or whatever the exit strategy is. So getting those monthly payouts is always nice.
definitely love it. Thank you so much for having me on. I really appreciate it. I'm looking forward to seeing you in Dallas. Like that's not that far away.
I
It's like
know, it's crazy. I can't believe it's almost 2025. Yeah, but thanks for giving me your time today, and I will continue to pray for your wife and your family.
thank you. I appreciate it.
Have a great day.
You too.
Thanks.